Well, over the last 20 years, what we've seen is that the emerging markets, people like China and India, have been catching up very rapidly with the advanced economies. And we've really seen a power shift to the east, the centre of global economic gravity moving, almost for the first time since the Industrial Revolution. The way we like to think about this in PwC is by contrasting the E7, which is the largest 7 emerging economies, so the 4 BRIC economies plus Mexico, Indonesia, Turkey, against the G7, the established advanced economies, the US, Japan, the big European economies. And what we see is that 20 years ago, the E7 were miles behind. Now they've narrowed the gap considerably, and by 2030, we actually think they'll be relatively larger than the G7 in terms of the size of their economies. China will emerge as the biggest economy in the world, and all 7 of these economies will be in the top 12 economies in the world by 2030 on our estimates. So it's really a radical shift in the kind of league table of economies around the world. Just take the G7, for example. Italy has not actually grown at all since the year 2000, with the various ups and downs in its economy, whereas Canada has grown by 30%. China has more or less tripled its GDP since the turn of the century, whereas Mexico, also in the E7, has only grown by about a third. So there's a huge variation in performance within these economies. And they're also very different in terms of their specific characteristics. And we've seen that economies like China have been very good at absorbing technologies from the rest of the world. But I think increasingly they have to become innovators as well, and we're seeing signs that they're beginning to do that. But we do think that businesses should look beyond the BRICS, beyond the E7, to some of these broader opportunities. And we've created this grouping that we call the F7, which are just a level below in size the E7 or the BRICS. And they include Colombia and Peru in Latin America, they include Nigeria and Morocco in Africa, and they include Vietnam, Bangladesh, and the Philippines in Asia. Now, of course, there are still risks associated with these countries, and you need to have a very clear understanding of the political and regulatory regime, and you need to be very smart about your entry strategy if you're going to make the most of them. What we can see above all is that these emerging economies, as they continue to develop over the next 10, 15 years, will become huge consumer markets. We're already seeing that the middle class in Asia-Pacific region is actually going to become bigger than the US and Europe combined by 2015. By 2030, it will move far ahead. So there's a whole range of opportunities there for business and indeed for other organisations to exploit these huge new consumer markets. Clearly, there will be both winners and losers from the rise of these emerging economies. I think on the downside, there will be some sectors that will face very tough competition from companies in these new emerging markets, and they will have to adapt to that. Governments have an important role in trying to help businesses in the UK and other Western economies adapt to this new world order. At one level, it's helping particularly small and medium-sized companies to break into these new export markets. That could involve giving increased export finance. It could involve giving increased advice, just helping to open doors to those markets. It's no longer quite so simple. It's not just all about growth and GDP. It's more about differentiation. It's more about being aware of the nuances, the institutional differences, the regulatory differences, the differences in social perspectives in these economies. So you can't just treat the emerging markets as a single block. You need to take a very differentiated approach. That's what we do in the Escape Index, that's what we do in our pioneer services, and it's really what increasingly businesses and other organisations need to do if they're going to be successful in these emerging markets.